Hello people. So practice questions on IND AS 20 government grant, right? We have already done practice questions. There were like 4 to 5 practice questions, but in one of the first practice question, which was an LDR question by the way, in the latest study material of ICI, solution has been changed. So I'm recording this video again with a new solution. So follow this for coming attempts. Fine. We'll also post this video in your YouTube also, just in case your validity has expired. You can check out this video on ArivuPro YouTube channel also later in case you want to refer this. So what is this? Yes. So let's look at this question and kind of redo the whole thing instead of trying to see what changed. Let's solve it fully so that it becomes a little easy for all of us to get a grasp on it. Okay. It's a practice question 1, LDR question by the way. Entity A is awarded a government grant of 60,000. Okay. Receivable over 3 years. So government told we will give you a grant of 60,000, but we will not receive entire 60,000 now. We will receive it over a period of 3 years. 40,000, not equally. 40,000 we will receive in first year, 10,000 each in year 2 and year 3. 40, 10, 10. That's how we will recover the government grant from the government. That's what has been agreed upon. Contingent on creating 10 new jobs and maintaining them for 3 years. So it's an unconditional grant or a conditional? Conditional. We have to create an employment to 10 new jobs we have to create, and all those employees they have to stay in the organization for 3 years. That's a condition. So I mean this condition will last for how many years? 3 years. So this, sir, when you create a job for employees, you're going to pay salary. Salary cost you will show in balance sheet. I mean, this is what? Asset related grant or income related grant? This is not any asset related grant. This is for an employment. On employees, we pay salary. Salary is a what? P&L component. So this is not asset related grant. It is a income related grant. But unconditional or conditional? How many years condition will be there? 3 years. So if it's a conditional grant, means the government grant temporarily you will park it in deferred income, and from deferred income you will transfer to SPL over a period of 3 years in the ratio of employment cost that you incur. The employee is recruited at a total cost of 30,000. Okay. So obviously in order to hire the employee also, we need to find consultants and all that. So in order to find the employee, we have to incur how much cost? 30,000. You will find the employee in first year only. So this 30,000 you will incur in year 1. The wage bill means salary. These employee ka salary in the first year is 1 lakh. So first year salary 1 lakh and hunting cost 30,000. Maybe we paid some 30,000 to Naukri.com or HR to find the employee. So totally we incurred how much cost in first year? 1,30,000. The salary in the first year may be 1 lakh. It is rising by 10,000 in each of the subsequent years. That means year 1 ka salary is 1 lakh, means year 2 it will not be 1 lakh. It will be 1 lakh 10,000. 10,000 more it will become. In year 3 it will become 110 will become 1 lakh 20,000. Like that. Year 1 may totally you spent how much? Don't say 1 lakh. We spent 1 lakh. 1 lakh for salary and 30,000 for the hunting, the expenditure over. Now don't say 130 plus 10. Salary is 1 lakh only. Second year it will be 1 lakh plus 10,000, 110. Third year it will be 110 plus 10, which is 120. This is one time. This 30,000 you will incur as a one-time expenditure only in year 1. Okay, this is it. That means we'll have to book the grant income in what ratio? What is the ratio here? 130 is to 110 is to 120. So the grant initially will be parked in deferred income, and from deferred income it will be transferred to SPL in this particular ratio. Comfortable, everybody? Okay, but grant you have not fully received. Okay, 40, 10, 10 you are receiving. Okay, calculate the grant income and deferred income to be accounted in the books for year 1, year 2, year 3 under 2 situations. Basically, they are asking deferred income ka balance. Second, they are asking how much deferred income you will recognize as an income in SPL for all the 3 years. Okay, but under 2 situations. One, there is a reasonable assurance that entity will comply with the condition and grant will be received. That means first one, RC is met. Company is reasonably sure that condition also they will fulfill and grant also they will receive. So the day, because IND AS 20 says you don't have to wait till the time you receive the grant to start your accounting. The day RC is met, from that day you can start your accounting. So here RC is met when You can assume year 1. They have not given which year specifically RC is met. No? So we'll assume year 1 beginning itself RC was satisfied. Okay, that is first situation. Second, there is no reasonable assurance that the grant will be received. So one of the RC for recognition criteria for recognizing government grant is there should be a reasonable assurance that grant will be received. Here it is satisfied or there is no. So here RC, basically first criteria my RC is met. In which year we are assuming? Year 1. Second my RC is met or RC is not met. RC is not met or not satisfied. So under these two situations, we need to give the accounting. First one is very simple. You know this. Tell me what entry you will pass. I'm given with the journal entry file. What entry you will pass? You can't write bank. You can't write bank account debit 60 because you're receiving full amount of 60 or in installment. Installment. So that means you will write what? GG receivable account debit 60,000 to deferred income 60,000. Correct? Everyone good? Now this GG you have received in 3 installment. 40, 10, 10. What is the journal entry for amount received? Bank account debit to GG receivable. First year 40, next year 10, next year 10. That way GG ka drama fully over. Clear, sir? Any problem? And what do you do with deferred income? From deferred income, you will transfer it to SPL. Over how many years? 3 years. In what ratio? In related expense ratio. That expense ratio is 1,30,000. 1,10,000 is to 1,20,000. So 130 is to 110 is to 120. In that ratio, you amortize 60,000. Okay, don't take 40. Government grant receivable, you book this. Deferred income, you book this 60,000. 60,000 you'll have to amortize in this ratio. Tell me how much is that? First year, how much? 60,000 in this ratio if you do. You're getting 21,667 for first year. 60,000 into 130 divided by 360, I think. So this amount. 60,000 into 120, if you add all this, you're going to get 360. So 60,000 into 120 divided by 360 is 18,333. Then this is round off 20. Fine now. This is the deferred income you will recognize in SPL. This is one of the requirement of the problem. How much income you will book it in SPL? This is the answer. And they also ask deferred income ka balance. What is deferred income ka balance? Check and tell me the screen. How? Simple. You have credited deferred income by 60. And you debited deferred income by transferring to SPL in the first year, 21,667. 60 credit, 21,667 debit. So how much balance? 38,333. Second year, same. So from first year, second year, fully you would check. 60 credit to 21,667 debit, 18,333 debit. So 60 minus this you do. How much balance? 20,000. Third year, fully it will be transferred. Balance will become 0. This is when RC is met. When recognition criteria is met, this is the journal entry. This part is same. They are presented in a table. You can do any presentation, your call, right? I've just showed it an entry for little more clarity purpose. Ideally, do the presentation in statement. That's the best way. Just for little extra clarity purpose, I brought the entries there. This is the first situation where the recognition criteria was satisfied. This is pretty easy. Second one is what is actually important from this particular case study. Anything you are updating? You need some time, or can we get to online also? Comfortable? Can you give me a quick thumbs up, heads up about this? Are we okay completely with this? Fair enough. Okay, now second one, they are saying when there is no reasonable assurance that grant will be received. One of the recognition criteria for you to account grant is there should be a reasonable assurance that you will receive the grant. Here it is satisfied or not satisfied. If both are satisfied, then only you can do the accounting. Here it is not satisfied. So second case may basically RC is not satisfied. If RC is not satisfied, no, do the accounting on a receipt basis. Do the accounting on a receipt basis. That's all. Meaning you will book the government grant only when you receive it. As simple as that. Till then, don't book. If recognition criteria is not satisfied, if recognition criteria is satisfied means you can do your normal accounting. If RC is not satisfied, then you do the government grant accounting as per IND AS 20 on a receipt basis. The year in which you receive, that year only you account it as income. Well, how to do it, I'll tell you. But basically, we are doing a receipt basis accounting in a way over here. Everyone okay? Clear? Now look at the screen for a minute, everybody. Or You're updating something. Okay, right. Finish up. Okay, now second criteria when RC is not met. As I said, don't follow this solution, right? Okay, this is old table. Even in ICAC new study material, table is revised. This content they have not revised. So that means in a way that solution is wrong. This part is correct in the new material. This part is not correct. This they copied from the previous edition. So leave that. Follow this completely. I've written it over here. Okay. So this solution, what we are doing over here, you can present this one only, right? So I've given you the entry also. I've given you the format also. If you do this, it's enough for exam. This is what they're asking. How much grant income you will transfer to SPL? How much is the balance in deferred grant? These two are the requirement of the question. To understand it better, I've given you the entry also. Okay, follow this. And now, we got to know that we have to do accounting on what basis? Receipt basis. First year, how much grant got awarded to us? 60. But did we receive 60 or only 40? That means we will book an entry for 60 or only 40. We have received 40 means, as far as we are concerned, grant is only 40. So what entry will pass? Government grant receivable account debit to deferred income 40. First due entry. Then what is the journal entry when you receive it? Bank account debit to government grant receivable 40,000. Correct? Huh? Everybody good? Or you can directly pass one entry. Bank account debit to deferred income. GG receivable, you can cut it off. That's okay. Since last May we used GG receivable, here also I used. If you want, you can cut GG receivable and write bank account debit to deferred income. To what extent? Only to the extent of money received. First year you received how much? 40. Second year you received how much? 10. Third year you received how much? 10. Only to that extent pass the entry. This is the first step. Understood, sir? Everyone cool? Next one, can we see? Okay, next one I'll work it out from the table. Then I'll come back to this. Okay. Now stop what you're doing. Check the screen. How much grant did you receive in the first year? We know that here we have to do accounting on what basis? Here we have to do the accounting on a receipt basis. Because why? RC is not satisfied. That's the reason. Whenever RC is not satisfied, we'll have to present in this fashion on a receipt basis. So how much deferred income did you recognize in the first year? 40,000. Okay. Now, can you, just because you have received 40,000, can you transfer entire 40,000 to SPL? No. See, you have received the grant with a condition that you have to train the employee for 3 years, right? So, training is not fully completed in year 1. You'll have to give the training or you have to hire them and keep them for 3 years, right? So, here what you will do is, last May, 60,000 you amortized in expense ratio. Here you will take 60,000 or 40,000. Since 40,000 only is your deferred income for first year, 40,000 you will amortize in 130, 110, 120 ratio. That's all. Understood, everybody? Presentation is okay. Why 40? Because we have received only 40. Other 20,000 we don't have reasonable assurance whether we will receive or not receive. Hence, you can't do the accounting for it. We have received 40, no? So 40 ka you can transfer from deferred income to SPL. In what ratio? Same expense ratio. 130, 110 and 120. What is that 130? 1,30,000 is the total employee cost for first year. Second year 110. Third year 120. This. In this ratio, instead of 60,000, we'll use what? 40,000. Okay, sir. That's the first step. Are we comfortable with the amount? Check the amount for your, if you want, you can calculate and confirm. Done. Everybody good? Correct? Okay. So this is the amount. Fine. First I'll do a full table, then I'll get to the entry. Leave the entry part. Okay. You received only 40,000 or second year you received 10,000? Second year again you received 10,000. Fine. Now this 10,000, don't book it for 3 years. Book it only for year 2 and year 3. Because first year we were not sure whether we're going to receive this or not. In year 1, see, we received 10,000 only in year 2. In first year, we were not sure whether we will receive this 10,000 or not. I mean, this is not an income for first year. This is an income only for second year and third year. This wala accounting. Step accounting you need to do basically. Understood? In a way, you are treating this as a 3 different grant in doing accounting. That way, if you want, you can think of it like this. 40 is a separate grant, 10 is a separate grant, another 10 is a separate grant and do the accounting. This 10, when did you receive? In year 2. In year 2, did you incur 1,30,000 expense or 110? 110. And third year, how much more you will incur? 120. So, Only second year and third year ka expense ratio you use, which is what? 110:1. In that ratio, you book. First year, no portion of the grant received, you will book it as an income. Why? Because first year you did not receive it, nor you were sure that you will receive it. That's the reason you will not book it as an income. No part of this 10,000 you will book it in first year. You will amortize it over second and third year in this ratio. Now, everyone give me a thumbs up of this. If you have understood this, third one you will tell. This is the highlight of this question. Or this is where the solution got changed. Earlier they had a different approach for this. Leave earlier what they had, it's irrelevant, leave that. We'll follow this so far. Okay, everyone 100% comfortable? Oh, great. Now that's all or one more? Year 3, how much again grant you receive? Again in third year you received a grant of 10,000. Now this 10,000, when did you receive? Year 3. That means year 1 and year 2. Were you sure you're going to receive 10,000? No. I mean, any part of 10,000, you'll book it as an income in first year and second year or only third year? First year, second year, no part of 10,000, you'll book it as an income. Entire 10,000, you'll book it as an income to SPL only in the third year. Got it? Now you need to sum it up. If you sum up all this, you'll get to know how much income you're booking to SPL. That's what I've written here. Total grant income to SPL. Add all this, how much? 14,555. Add all this, you'll get how much? 17,005. Add all this, you will get 28,550. If you add all this, obviously you will get 60,000 because that's a total grant, right? That's a fund. Okay. So basically, what is this? What is this? From deferred income, you have to transfer to SPL this amount. Now tell me the entry. Deferred income account debit to SPL. First year, how much? 14,445. That's what I've written here. Second year, how much? 17,005. Third year, 28,550. That's it. Clear? This is one other requirement of the problem. How much deferred income you will transfer it to SPL. Then they also asked how much is the balance in deferred income. That is also very simple. Balance in deferred income. Check how much deferred income. Check, or maybe now that you can find out maybe if you want from the entry. That will be easier. Or you can also directly find from here. Entry, I think it will be easy. Okay, let's try to work it out from the statement only. Because in exam, you may not present entry. You may only directly do the statement. Check. Very simple. First year, I want to find deferred income ka balance. How much deferred income did I recognize in the first year? 40. Though grant is 60,000, I only booked 40. Why? Because RC is not met. How much ever we receive, that much only we will show. So how much balance was there in deferred income at the beginning of year 1? 40. How much did you transfer it to SPL? 40,000 was a balance. How much did you transfer it to SPL in first year? 14,445. How much balance is still there? 40,000 minus 14,445, which is 25,555. This you will show it in the balance sheet. Clear? Second year, can you tell me? Second year, how much? Now don't tell grant is 10. No. Sir. Now for second year, the grant is 50. How? 40,000 received, oh, plus again 10,000 received, no? So total grant is how much now? 50,000. In that 50,000, how much did you transfer it to first year SPL? 14,555. How much did you transfer it to second year SPL? 17,555. Do that. So you have to consider all the receipts minus all the transfer. Keep that in mind. First year you receive 40. Second year you receive 50. So second year you receive 10. So total balance in deferred income is 50. In that 50, 14,445, 17,005 you have already transferred. So deduct that. So how much is the balance? 18,550. This is the balance. Third year, what is the total grant you have received? 40 in year 1, 10 in year 2, 10 in year 3. This is the total receipt. In that first year you transfer 14,555, 14,445. Second year 17, then 28. Obviously third year balance should be 0 only. 3 years accounting, no? So balance at the end of third year will obviously be 0. Even if you calculate, you will get 0. That's all it is. So this, if you present in exam, that is enough. Either you can present like this, or ICA is done in a slightly different way. Okay, they have presented horizontally. I felt their presentation, the new study material, they presented in table. I felt that was little complex. I didn't feel that it was that much comfortable for exam. So I have redone it in this format. But you're okay with this format, no? You can follow this, it's fine. But these are the requirement, okay? This is what they've asked finally in the question. This one and this one. This is the requirement of the question. This has got changed. So follow this for exams going forward. Any other doubts or sorted? Paka? Alright people, thank you. By the way, all other practice questions are same. You don't have to worry about that. There are other 3-4 practice questions. They have not changed. So you can follow the those question videos. They are good enough. Only practice question 1 got changed. Solution. Others are same. Thank you.